Hey everyone, welcome back to Corporate Decoder, the place where we help you make sense of the endless stream of corporate news and filings. And today we're diving into Lowe's latest financial report, and let's just say the numbers are painting an interesting picture, so stick around to see if it's a masterpiece or a messy sketch. Before we dive in, if you like getting straight answers about what's really going on with big companies, hit that subscribe button. We're building a community here to decode this stuff together, and speaking of community, our Discord is linked down below. Come join the conversation. Alright, so this report is from Lowe's Companies, the big home improvement retailer, and it's all about their second quarter results from August 2025. Think of it like a checkup for the company's financial health during a specific period. The report itself is dated August 20th, 2025, and it covers the period up to August 1st of the same year. This gives us a snapshot of how Lowe's was doing right in the middle of the summer. Now, Lowe's is a publicly traded company on the New York Stock Exchange, and its ticker symbol, the shortcut you use to find its stock, is Lowe. This means when we talk about Lowe's stock performance, that's what we're referring to. The main reason Lowe's put out this report is to share its financial results for the second quarter. Companies have to do this regularly, so investors and pretty much anyone interested can keep track of how they're doing. They've attached a press release with all the juicy details. This press release is basically the company's way of telling the world its performance, and it's usually packed with key numbers and management's perspective. And here's something cool, they also included an infographic. Infographics are great because they take complex financial data and turn it into easy to understand visuals. It's like a cheat sheet for the report. Now let's get to the heart of it, the actual financial numbers. While this filing doesn't contain the detailed tables directly within the scrollable text, these reports usually stem from broader financial statements that we can infer the key takeaways from. Based on the purpose of this 8K filing and the reference press release and infographic, we can anticipate that the core of the filing is to report the company's performance metrics. And signing off on this report is Dan C. Griggs Jr., who holds a pretty important role as Senior Vice President, Tax and Chief Accounting Officer. His signature means he's confirming that the information being presented is accurate and in line with regulations. So what can we tell about Lowe's from this? Well, this is a current report, meaning something significant happened. In this case, it's the release of their quarterly financial results. These reports are crucial for investors to know if they should buy, sell, or hold onto their Lowe's stock. The fact that they've released this specific form indicates they are sharing important financial updates that affect the company's standing. Now let's think about what this might mean for Lowe's. Typically, when a company like Lowe's reports its quarterly earnings, investors are looking for growth. Are sales up compared to last year? Is the company making more profit? Are their expenses under control? They'll be comparing these numbers to previous quarters and also to what analysts were predicting. If Lowe's beats expectations, the stock price might go up. If they miss expectations, it could go down. We also need to consider the broader economic picture. How is the housing market doing? Are people spending more on home improvements or pulling back because of inflation or interest rates? Lowe's success is tied to whether people feel confident enough to tackle projects around their homes. Looking at this from a Warren Buffett style perspective, we want to understand the underlying business. Lowe's is in a competitive space, battling with companies like Home Depot. Their ability to manage inventory, control costs, and attract customers are key. This report is a report card on how well they're doing those things. We'd be looking for signs of strong management, a sustainable competitive advantage, and a business that can weather economic downturns. For example, if their sales are up but their profits are down, it might suggest they are spending a lot more on marketing or supply chain to achieve those sales, which isn't always a good sign for long-term profitability. Conversely, if profits are up but sales are flat, it might mean they are becoming more efficient but they aren't attracting many new customers. This filing is really just the announcement of the results, so the real meat would be in the exhibits, the press release and infographic. If we had access to those, we could really dig into specific numbers, perhaps seeing data on comparable store sales online versus in-store performance, changes in merchandise inventories, or maybe even updates on their strategic initiatives. Without those detailed exhibits directly available here, we can infer that Lowe's is sharing its performance and investors will be dissecting every number. The market reacts strongly to these quarterly reports and Lowe's has a responsibility to be transparent with its shareholders. So to wrap this up, Lowe's is letting the world know how it performed in its second quarter of 2025. This is vital information for anyone vested in the company's future. We're seeing a company that's actively communicating its financial standing, which is a fundamental requirement for public companies. Now, looking at what we can glean from this filing structure, Lowe's is clearly focused on reporting its operational and financial condition. A strong performance here would signal good management and a healthy business, while any red flags could point to potential headwinds. We'd also be keen to see if there are any mentions of potential risks or opportunities that could impact future results. A company like Lowe's, being in the retail and home improvement sector, is sensitive to consumer spending, interest rates, and the overall health of the housing market. If the economy is strong and people are buying homes and renovating, Lowe's typically thrives. If the economy slows down, people might postpone those big projects, which could hurt Lowe's sales. In conclusion, this report is a standard but crucial update from Lowe's, signaling the release of their second quarter financials. While we don't have the specific numbers in front of us, the fact that this is being filed means these results are significant for the company and its investors. The real story will be told in the detailed financial tables and the company's own commentary within the press release and infographic. Alright. That's our breakdown of this Lowe's filing. What's your take on what these financial reports generally mean for a company like Lowe's and what they signal for its future? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep dives. Don't forget to check out the Discord in the description to join our community of corporate decoders. Thanks for watching, and we'll see you in the next one.